Finance Minister Nirmala Sitharaman presented the first full budget of the newly elected NDA government. Today we have with us Mr. Nilesh Shah, Managing Director of Kotak Mutual Fund, to give his outlook of the budget and also how this will impact mutual fund investors. Sir, I would like to begin by asking about the good of the budget. What do you think? What are the positives of the budget?
This budget came at a time when Finance Minister had problem of plenty. The tax collections are strong. RBI and PSU dividend is very high and markets are on the bull run, so divestment could happen. In this budget, the Finance Minister has tried to achieve trinity of impossible. On one side, she has pursued the path of fiscal prudence. Not only this year's fiscal deficit at 4.9% is 90 basis lower than last year's fiscal deficit target, but also there is a commitment for next year's fiscal deficit at 4.5% and reduction in government debt to GDP ratio going forward. India at this rate will become primary surplus economy, one among the few in large economies around the world. Second, this budget has provided 11.11 lakh crore on infrastructure investment, which is a jump from 9.5 lakh crore last year. Third, recognizing that India has to create appropriate skills and appropriate jobs for its youth, the budget has provided various measures for employment creation. Combination of these three things, fiscal prudence, employment generation, and infrastructure investment, completes trinity of impossible.
Now, what do you think? What should be the outcome of the budget?
Well, I just want from this base, one, rating upgrade potentially as India brings combined deficit from current 8% to below 7%. Second, this budget should lay the foundation of inclusive growth and path to the Viksit Bharat. And third, this budget ensures that we retain investors' confidence and the little bit of downturn we witnessed in foreign direct investment last year is reversed.
Coming to taxation, long-term capital gain, short-term capital gain, STT on F&O, all were increased. How do you think this will impact markets?
The market right now is witnessing momentum thanks to the Triveni Sangam of corporate earnings growing in double digit, liquidity reasonably coming strong, and sentiments turning positive. At this point of time, if capital gain is increased a little bit, it's not going to materially alter market's momentum. But do remember that first STT was levied in lieu of capital gains. Then STCG and LTCG came along with capital gains at 10 and 15%. Now they are being increased to 12.5% and 20%. I think there has to be a balance between STT, STCG and LTCG so that an investor is willing to provide capital to entrepreneurs of India.
Will this have any impact on arbitrage fund?
There will be increase in STT that's bound to impact arbitrage funds return. But hopefully with taxation benefits continuing for arbitrage fund, investors' confidence and investment in arbitrage fund will continue. Arbitrage fund is the perfect example of Chanakya's treatise on how a king should collect taxes. Chanakya advised taxes should be collected like honeybees collect honey from flowers. Arbitrage fund last year delivered 51% taxation to the government. Investors paid 15%. Fund paid about 18% by way of STT and GST. And because fund is one part of trade in the market, there is counterparty to the trade. They paid another 18%. If we take last 3 years average, that number is 56%. With increased STT, The tax collection will even increase further. Investors are willing to pay tax. Government collects more than maximum marginal rate, and this is how taxes should be collected.
Gold import duty is cut from 15% to 6%. What do you think? What will be the implication?
We have been advising for last 1 year our investors that we remain bullish on gold, but mentally be prepared for drop in rupee gold prices as import duty comes down. Today, finally that has happened. Gold rupee prices will be down about 9% because of the import duty reduction. We still remain positive on gold. We believe central bank buying of gold will continue to push prices higher. And with this imminent reduction in import duty, now there should be stability. This is now time to invest into gold ETF or gold fund of fund.
Now, coming to debt markets, how do you think this budget will impact the debt markets?
The debt funds unfortunately remain in wilderness. Today there is some confusion about whether grandfathering given for debt fund investment before March 23 will continue or it will subsume under 12.5% long-term capital gains tax. We will seek clarification from Honorable Finance Minister and request that grandfathering should continue as promised. I think there is a need for some incentive to debt mutual fund. Listed debentures gets taxed at 20% beyond 1 year investment. REIT InvITs gets taxed at 20% beyond 1 year investment. But net debt mutual funds will continue to get taxed at applicable slab rate. We genuinely request Honorable Finance Minister to give some incentive for debt mutual fund so that it can be at par with listed debentures and REIT InvITs.
Well, as a mutual fund investor, what do you think? Is it time to change asset allocation?
Yes, I think one can continue the neutral weight in equity, be tilted towards large cap, focus more on portfolios which have quality rather than momentum, focus more on those stocks which have diversified ownership, that is high floating stock. Avoid counters where floating stock is limited and investment or holding is concentrated. Try to invest into reasonable or fairly valued sectors like private banks, IT, chemical, consumer discretionary. Avoid some of the expensive sectors like select defense and railway company, some of the PSU banks, some of the industrial and capital goods company. In terms of fixed income, duration should be preferred. And in terms of gold fund now with reduction in import duty makes sense. Will recommend neutral weight to equity. Will recommend neutral weight on fixed income duration. And will recommend overweight on gold.
Lastly, sir, is it a good time to invest on fund of fund? What do you think? Is there any taxation benefit?
I think the one benefit of this budget is towards fund of funds which invest more than 65% in underlying equity fund. Even gold fund of fund also benefits from changes in taxation. Hitherto fund of funds were taxed more like old debt funds. Now they will be taxed depending upon whether they have more than 65% in equity or not. So certainly fund of fund becomes more interesting from investors who are into higher tax brackets.
Thank you, sir, for joining in. Hope it helps all the investors out there. Keep following Kotak Mutual Fund for all budget-related insights.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.